Okay. My apologies, everyone. Had to handle a lot of people's credit profiles. Had to deal some credit business. Had to deal with some credit business. But let me share my screen and let's look at the Dow Jones. Like I told y'all, the market isn't doing good. It is bloody, bloodshot red. I don't know how many times I gotta tell y'all that all my inverse bear ETF plays has been nothing but a win. But the stock market rose up early set, so it had a good 270 point little go. It consolidated sideways, crumbled downward. Then it literally started falling off. And I think it's because of political news, because usually around this time period, this is where all the political news from back east start relaying to all over across the nation. Because with that, that's a huge dip. We lost about 526 points. Meta, focus on Meta. Then I got a cybersecurity stock that I need you guys to be focused on. Got my notes today. Okay, so yes, as we can see, Meta is still getting its ass whooped. And like I told y'all, the proper entry for this, my honest opinion, for all my scalp, option traders that do put options all day and camp out and just make money that way, I think this thing is going to keep on crumbling. I think this thing is going to keep on crumbling. I think it's going to keep on crumbling. But let me check on the chat really quickly. So for anybody that wants to come in on the panel, this is an open panel. But we're going to talk about a lot of these other plays. So this is cybersecurity, certain partnerships when it comes to Meta. Brandy Davis, respect to you, Brandy. Respect to you, Miss Davis. So what we're going to focus on is OSCI. So this is a gold mining company. Gold and commodities is up. Actually, we're in the age of inflation. Anything that's gold, silver, it was supposed to be crypto that was supposed to be inflation proof. But now as we see, China really runs the market. Russia really runs the crypto market. So $1.3 trillion that just literally just thin out in thin air just sold, But gold mining should be more resilient. No problem, Brandy. No problem, Brandy. If you haven't emailed me, email me already. If you haven't, and if anybody needs to get in contact with me when it comes to a consultation or credit repair or credit funding, my email is creditbuilder475@gmail.com. So I got to get you guys involved when it comes to these stock plays. So I'm going to share my screen. Brandy, if you want to come up on the panel, if you have time to come up on the panel, if anybody wants to come up on the panel, feel free. Feel free. So let me share my screen. But yes, Meta, this specifically, Snapchat actually has a better, let me type in Snapchat before I transition to the other plays. So let me get you guys in Snapchat. So Snapchat is actually beating Facebook when it comes to the valuation. The valuation actually is more better when it comes to Snapchat because they don't have all this mounting debt. Plus, they don't even have they didn't lose $230 billion in one setting. So if we had to go for dollar when it comes to these social media stocks, it would be Snapchat. Because Snapchat has been like the biggest winner when it comes to the whole pandemic. They won. When I told you guys to get involved in Albertsons, they're still winning. We're going to go on Albertsons. Then I'm going to give you guys my penny stock plays. Then we're going to transition to real estate. We might slightly talk about crypto. But yeah, so I would say this is a better entry price. This is always a good look because it's not overvalued. Actually, you're buying the dip. If you can see, you're buying the dip. So that's $70 a share. 2019, round 6. I don't think it's going to be $150 a share, but I think at least it's going to have better, steady run-up rise. This is going to recover. I think it's going to recover more than Meta. Boy, Meta lost $230 billion. That is not good. It's not good. So I told you guys before third stimulus passed. Albertsons, any type of grocery store stock merchant is winning when it comes to inflation. So when I told y'all about the stimulus, it was around, how can I put this? There we go. So third stimulus, that was around February, on the February mark. So if you guys took my advice from February to September, that would have been a 97% gain, $17 increase. That's dollar for dollar. Capital trades. So we're going to do Capital One, then we're going to do American Express. So for all the people that's coming in, feel free to join the panel. Feel free to come up on the panel. So I have my bet on Capital One due to when interest rates come up increasing, and the Fed chairman, Jerome Powell, he already pretty much said it. As you can see, look at this good trend. Look at this good sidewinding trend in the past 5 days at least. You always buy the dips. So this is good for any of my option traders that like to do credit spreads, put options. They could take advantage of day trading by just doing spread options. But let me get you guys to capitaltrades.com so we can look at your favorite politicians' stock market portfolio. So we could get nosy, so we could capture that 41% interest, Nancy Pelosi. Capitaltrades.com. Okay. There we go. So Capital Trades, you can find any and every politician's stock portfolio. There we go. Miss Nancy Pelosi. She's here in my backyard in California. So these will show buys, sells, most traded sectors. So that means that she's putting most of her money in information and technology, AI. And that also mentions on the aspect of green technology, green energy. In St. George's Eco Mining Company, her son, Paul Pelosi Jr., let's research his name really quick so you know what I mean, so I can cross-reference this. owns and has shares of SXOOF. Paul Pelosi. This is Senior. So Senior owns a lot of electric vehicle companies, buy shares, partnerships, dual partnerships, and etc. Paul Francis. So this is the son. So St. George's Eco Mining Company. That's SXOOF. St. George's Eco Mining Company. Boom. Pelosi. Paul Francis Pelosi Jr., Director, Senior Advisor, and an insider of the subsidiary issue other than he got connections with these companies. So electric vehicles is hot on the block. This is the SEC report, so you can look at all the filings. Get nosy, y'all, because these people are getting 40% every damn year when it comes to these stocks, man. This is a beautiful play. Beautiful play. Beautiful play. Like I tell everybody, you're supposed to make money off these politicians, damn it. You're supposed to make some money. So this is Paul Pelosi Jr.'s business. So that's his SEC report. So his stock market shit can be tracked. You can track it down on capitaltrades.com. So let me get you that link as well. Because you're supposed to make money off of this. Yeah. So let me put that link. So that's Nancy Pelosi's. And Nancy, she didn't want the disclosures to be out there. Nancy Pelosi. She didn't want none of this out. She didn't want none of this out. She said, hold up, y'all piggyback it off my plays? Yes, you're the lawmakers. It makes only sense. It only makes only sense to piggyback off y'all shit because y'all literally are like morphing America how y'all want it to be. Because, gas, it seems like gas is just going to keep on going up. It'd probably be $6 a gallon. If it's $6 a gallon, that's a impeachable offense. Okay, so Nancy Pelosi stock trades. There's the link. I don't care if you click off and click on this link. Click off, click on this link as well. Click off and click on this link, and you can be able to get 41% gains because she got 41% last year. She got 41%. Yes. 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 Because you don't want to lose funds when it comes to trading, Set aside politics for a second and focus on the green in between. And for your favorite hedge funds, you use whalewisdom.com. But you see here, let me zoom this up a little bit. Okay, so this is how much she has. She has $18 million in buys. Well, we can pretty much say 19 to 20 M's in play. She got 1.5 million sales. So that means she has put options. She has more call options. So call options is a buy. Sell options is a put. So she has 2 puts. So she's very bullish in her past 12 months. This is her buys. So this is $11.6 million in information technology. She has $5 million in communication services. She has 1.5 million in the banking and financial. So she's more bullish on technology than she is when it comes to communications. Hence, more bullish on communications than financials, consumer discretionary. Gotcha. So when it comes to consumer discretionary, she probably got a couple weed stocks up in here because they also throw that into consumer discretionary. So this is her trading activity. So this is her portfolio. I believe this is the pricing. So you can do this on any stock that she owns. So you can track it down. She mainly owns Apple. Huh. Research this company. Not familiar with this company. Okay. So she has, okay, non-public equity. So she has around $15 to $50,000. So Nancy owns that much. So let's go on some more politicians. Maxine Waters. Let's look at Auntie Maxine. Let me see if I can do it like this. Because the only why I'm doing it mostly on Democratic politicians, is because they're in legislation. They literally are forming everything that they want to do. Executive orders, mainly it's going to be lithium that I noticed. Lithium in the 33 prioritized type of amenities. So that's lithium, graphite, copper, tin, titanium, uranium, graphite, lithium ion facet. Those are going to be the prioritized when it comes to these politicians. So they all are tech. Apple, they're all geared up in Apple. Haven't heard this stock before. Wait a minute. Hold up. And this is Ro Khanna. So he is in California as well. He's in Cali as well. So we are going to stock his portfolio because he gained 15% last year as well. So Nancy got 41% in gains percentage-wise last year. Okay, so it's American multinational information technology service and consulting company in Teaneck, New Jersey. Okay. So the trend past 5 days, solid. Past month, solid. So this is an underrated play. For all the people that invest larger amounts. Whoa, this is a super play. What? Whoever that was doing call options off of these capital trades, they ate well. They ate good. That's why I said you always look at these lawmakers. You always look at what Paul Pelosi Jr. doing, what Ro Khanna doing, what Mitch McConnell doing, what are these people doing? Because you're supposed to profit at this at all cost. Damn it, it is literally no excuses at this point. So this stock did very well. So he sold his shares, but as we see, it's been doing very good. What is so? Okay, so he sold at 85. It's at 90, so he sold a little too early. So the dip was at 68. So as you can see, from that time period, that was the dip. So this means that this company right here, 16 billion, they are getting sponsored by the government. So Cognizant Technology Solutions is getting that bread and also getting government support. Plus, a lot of people are going to piggyback off of this and going to start trading based off of these politicians. They're not even going to look at Squawk Box or Fox Business. They're going to look at the politician that has the keys to everybody's legislation woes. So, but this would have been a good put option. Then rose it back up again. So this is a good play. So let me look at it pre-pandemic. Ooh. Okay, so it rose above, so it already passed pre-pandemic levels and beyond. So at its absolute lowest, it was $46. Give me one moment. So like I was saying, my apologies, everyone, but it was $44. This thing rose to has to be at least 200% for order to be able to recover from pre-pandemic gains and recover from the losses. It would have to be doubled the amount. So this is not quite accurate. So 73, it's supposed to be higher. It's supposed to be like around 150 to 200%. So option traders, they eat well off of this. So really, most of the people that you see on Twitter that are doing option trading, they are just piggybacking off of politicians. That's all. They're making their money the easy way, the somewhat easy way. So capital trades, you can look at all of the calls, the puts. You can look at any type of you go for the 13 Fs by using hedge follows. So that's how you find the hedge funds. I don't know why I couldn't think that on top of my head. So for all the people that's coming in, please click on the link. This is an open panel. Feel free to join and click on the link. This is an open panel. If you have any questions for me on the spot, feel free to ask them on the spot. But this is how you profit off of politicians' stock plays. Yes, I do. Yes, I do, Michael. Yes, I do, Michael. I really try to get everybody to the funding so they can trade. So, if I get you $20,000, $30,000 in funding, you have enough money to trade. But yes, I trade. So this is an open panel. Feel free to join, click on the link. And also feel free to click on the links when it comes to Nancy Pelosi's stock portfolio. Please feel free to take that as you go. Feel free to take that as you go. Paul Pelosi Jr.'s as well, because you got to make some money off of his type of plays. And you can do this on eToro. So the eToro app, when it comes to trading, you can make you can be able to make some plays off of their legislation, because most of the legislation is going to EV, but energy is kicking everybody's ass. ExxonMobil, we was talking about that for the past 2 years straight. And that was just something I just say, invest wisely, set aside some money. Exxon. Everybody was saying Doge. I'm like, man, Exxon is outperforming the market, where now, I keep saying this, but the Biden-Harris administration is trying to sue them for making too much money. So they done made $100 billion liquid. So ExxonMobil, I'm going to share my screen. I'm going to share my screen as well. So capital trades, this is where you find out who is investing in what. I wanted to do Maxine Waters, but I found a good stock. A lot of these people, they got good plays. They rig in the system where they know how to create the legislation, make money off of it, then pretty much tell everybody else that we are going to eat the rich. Okay, whatever. But ExxonMobil, XOM. Then after ExxonMobil, I recommend you guys American Express. I'm trying to find a good price entry to buy in. I want to buy in at 75, 73. Might do a call option on its way down. Try to get it on its way down so I can get it on its run up when it runs upward. 1 month. And that's because gas prices is up. So this is just reflections of what you guys see at the pump. This is just a reflection of what you guys see at the pump, man. That's why I try to tell y'all, Build Back Better gonna whoop everybody ass. So you profit on that. You get a structure, you get a good price entry, you do your research, your Googles, your Google alerts. Do your Google alerts, but $32 now. It was at 32 and it crashed a little lower. Crashed around 34. And ever since then, it's been like on a home run tear. Like 130%. Really, it's 200%, to be honest, because, it's really doubled. It's really doubled. And as we can see, it still hasn't peaked all-time highs. Because all-time highs, the share would be 88. But at its lowest, 32. Plus, it's a dividend, y'all. Plus, it give you a good dividend yield, as you can see. Give you a good dividend. Plus, it got $331 billion market cap. So they are an oil monster. So let me get you guys to OSCI. So this is the gold mining. I kept saying that. OSCI. Get you guys involved in Fern. That's the cybersecurity. Up 15% today. So this is a gold mining. So anything in gold, like I said, gold ETFs, gold shares, gold bear 3X. It's winning. As you can see, it's still winning 200%. And I told y'all to buy the dip. I told y'all. I'm going to keep telling y'all, gold mining is going to keep winning. Everybody else focused on crypto too heavily. I told you guys you can focus on crypto. You can follow crypto. But look at the gold stock. So that's OSCI. Then I got another play. So this is the stock ticker or TIPS. So that's TIPS. Because I made my $300 investment in this into a pretty penny. So yes, this gold mining company, focus on it. So this is the bond market. So for all my safe investors that say, real deal, I don't like penny stocks, man. Give me something stable. This is stable. This is pretty much as stable as you could pretty much get. But a lot of people are putting puts. A lot of people are shorting this, as you can see. But you buy the dip. You never buy all-time highs. I never recommend nobody to buy all-time highs. I always tell people that if you see a stock that has a big run-up, you try to be able to short it. You short those things. You don't go all in. But this is just showing you that this right here, I like dips. So this thing with me, people that put options, they can profit off of shorting it. So you sell it at 122 and rebuy it in at 105, you done made a big profit on the downturn. Then you can use The proceeds that you use to buy the shares, one stock whole, and just hold on to it until it has to recover, or if it recovers at all, if it recovers, mind you, because the bond market is going to get crushed when it comes to these interest rates. In my opinion, I don't think the bond market is going to do good, but hell, what do I know? What do I know? What do I know? What do I know? Tech stocks, they're really going to get crushed when it comes to these high interest rate yields. Mortgage applications is at halts. So that means that mortgage applications has literally have it where people are scared of buying too high in the real estate market. So we're going to transition to real estate. So capitaltrades.com, Paul Pelosi's stuff that we went over. Tips stock when it comes to shorting a stock that's pretty much been beaten up on. Got y'all informed when it comes to Meta play OWUV. That's a Meta place for all the people that are bullish on Meta, that believe that Meta has a future. That's OWUV as research, mind you. Research all this. Granted. So let's look at some seller financing. Seller financing. Fit. NYC. Let's see what's in New York City. Yeah, let's see what's in New York City. Okay, they got 308 properties that's listed for sale with a seller financing. I bet you it's going to be upstate New York, but let me share my screen for everybody that's coming in. And for everybody that's coming in, please like the video. It's free. It's free. Helps the algorithm. Okay. So 2-bedroom, 3-bath condo. Home. Upstate New York, like I mentioned, a home for sale. $50,000. And they did a price cut. Ooh-wee. They did a price cut, $5,000. Okay. This needs to be completely finished. This needs to be finished. Okay, so it goes for 50. Try to beat up this price as low as possible. Try to get this for 30, 35. Let time be your friend when it comes to this, because the more it's on the market, the more that they want to get rid of it. Hence, you can negotiate downward, because you don't profit on real estate by buying at 50. Same way when it comes to stocks, you try to get at a good price entry. So you're technically shorting a real estate property. Instead of buying it for 50, you got your contract ready for 30, 35. But you also want to look at the comps when it comes to this area as well. So for all the people that's listening in, this is the address of the property. It's in Albany, New York. I am not a New Yorker, so I'm not going to act like I know this New York market. That's why I tell people to use the comps. Use the comps. Now, if it has 70,000 in repairs that's needed, make this into an 8-unit. Look at how much the rents are first. Look at to see if any has any code violations. One. Let's look at this description. Current owner has started renovations and has not finished the projects. This home will not go conventional financing, as well as FHA, cash offers only. And the current tenant removing items installed by the property prior to closing. Right for the purchaser with renovations, could be an excellent cash flowing property. Nice owner occupy. See, this needs to be knocked down, and this needs to be 8 bedrooms. Need to be 8 bedrooms because this looked like a commercial property. When I first thought of it, I thought of it as more of a commercial side. But say if we did tease the 3 bedroom, 750 times 3 bedrooms, that's 12. That's 2,200. Times that by 12, that's 27,000 net operating income. Like we mentioned, we would have to get this for 30, and then put a construction loan down in order to be able to get it more. Because really, if we just kept it flat by 3, that'll be 27,000. But I think this should be knocked down and needs to be expanded. It needs to be 7 bedroom, 7 bedroom, 4 bath. Look at the rents. If the rents is 1,500 and you charge range around 1,000 or 750 per door, if you just want to hurry up and get tenants in. Now this is what I like. The price is everything, because you can negotiate that one downward too. 10 bedroom, 10 bath. So these is multiples. Okay, multifamily home. Okay. So it's really 6 bedrooms and 10 bath built in 1920. So that's going to be a heavy repair. Try to chop this price down. Start off the negotiations at 285. Don't go past 340. You really try to get it as low as possible, because really 280 is so perfect. You can get it damn near half the price. Natural gas, hot water heater. Says here, great cash flow in 6-unit in a student rental area. That's even better. With amplified parking, because student rental area, they got their student checks, so they're getting their money from the government to pay any type of expenditures of housing. Property includes off-street carport, 6 spaces, 2-car garage. That's 12 spaces in total. No, pardon me, that's 8 spaces, 2-car garage, 12 spaces in total. Building requires little to no maintenance. Tenants pay utilities. Owner furnishes water and sewer, trash and lawn care. Co-op laundry area in basement. This needs to be a coin laundromat completely. This needs to be expanded. So you need to expand more of the laundromat to get more cash flow from them vending machines. Expanding units out. Construction lender. So the construction lenders that I have in contact with, they're very friendly when it comes to these. They love deals like these. They believe that you can turn this into a $3 million building. Expand this from 6 units to 12 doors. Expand this to 12 doors. It's 5,000 square foot. And this is Albany, New York. So I need to contact somebody that's in upstate New York that doesn't mind going to upstate New York frequently. I got people that's from New York, but if my man Alonzo's listening in, hopefully he has his take on that. But that's a good entry. Price would be 285, 325. Getting $100,000 construction loan, overestimate at 150. So you can profit 50,000 at closing. And that helps you when it comes to inflation. That helps you account for inflation. No. Any real estate investor right now is trying to leverage and pretty much hold their ground when it comes to inflation. That's why they're overestimating everything. That's why they're trying to get all the funding. That's why they're trying to get access to line of credit. I don't understand people that are credit hawks. Credit hawks, being a credit hawk, being anti-credit all the time, that hurts you when it comes to your leverage and value add opportunity. Because if you expand that 6-bedroom in the 12 unit, 1,500 times 12, that's 20,000 per month in rental net operating income. That's gross, mind you. Times that by 12, that's 216,000. Times that by 7 multiple. So if you want to sell this, matter of fact, let me share my screen one more time. If you want to sell this for a multiple, you can sell it at a 7 multiple range. You could sell this bad boy at a 7 multiple range where you got access to it at 285, got the construction loan. You looked at the scenario of the comps. You can have it where the appraiser has it at 1.5 million because the net operating income is 216,000 because you turned the 6 unit into the 12 unit and charge market rent. You know, you could get a loan for $1 million against the property because you built it up. You expanded the units. You probably can expand it to 20 units. See what's the zonings. That's where you get a zoning lawyer that's from New York. Or get someone that has understanding of the zoning and city violations and different type of red tape. Because, you know, New York, you know, it's hard running a small business in New York. I heard a New Yorker told me that. But get at a good price range that helps you when it comes to any downturn. Helps you save a lot of money because you buying it at 430, then you getting a construction loan for 100,000. You're all in 530. When I told you try to get that for 320, 280 range and have it where you overestimate the construction loan, you're only all in 400,000. Or you can do the seller financing and get it at even lower of a down payment, if any. A lot of people will structure it where they would just start sublet leasing and just charging market rent and just pay the market rent to the owner and getting it access that way with little to no down payment. So there's multiple ways of seller financing going down. You can have it where you put down 10,000, get access to the property, get construction loan, built it up, expanded doors, charge up on market rents, vending machines, coin laundromats where you get around $200 per month for a coin laundromat. And that's something I need to factor in too, because the coin laundromat, you can get, say, $7 per tenant door times 12, times that by 2 times a month. That's 170 times 12. That's 2,000 added on income. Another $200 when it comes to the vending machine income. Plus that's around $400. Times that by 12, added on to the net operating income. That means that in combined, you can get around $230,000 in total gross net operating income. The appraiser appraised the building for 1.5, 1.7 million. You get a 65 to 70% loan on the property. You take that money, you go get you some vacant land lots. You go build on those areas. Because if the neighborhood is expensive, where that neighborhood is going, say Alpharetta, Georgia, $600,000, $700,000. Try to find some vacant land lots where it's under 200,000. Get access to a lender that will lend you the funds, 10% down. There's plenty of them out there. You got to pay a lot in interest, but for the exchange of a 10% down payment, it's 8% interest, 2% loan points. My projection is if hedge funds keep buying up Atlanta, Georgia, that market is going to keep on going up while everything else go crumbling down. Then, New York is crumbling every single day. You got people that's literally buying properties from New York to New Jersey. So let's keep going to more New York properties. Okay, so more upstate New York properties. Okay, Suffolk County, Smithtown. That's 500,000. It's a HUD foreclosed. Multifamily, 4-unit, 75,000. Once again, you try to get this thing as low as possible. You see what's the matter with it. What's the loan on the property? You find out what's the loan status, any code violations. Try to find out all that status as possible. Try to find out as much as possible about this property or any property that's really cheap like this. But 2 to 4 unit duplex. Okay, so this is government-sponsored agencies. Fannie Mae or Freddie Mac own this property after foreclosing on the original owner. Okay, it says here. Okay. I already know what Freddie Mac does. Offer goes through published listing agent. Okay, so they listed this shit themselves. 6-bedroom. Okay. How much per door I can charge? $750 times 6. That's $4,500 per month on each door. Times that by 12. That's 54,000. Yeah, and people are charging per door. So this is an extremely great cash on cash return. This is why I like this website. You get listings where it's people that are completely desperate to sell, people that have properties that have so much upside. And this is how you can beat inflation, y'all. This is how you can beat inflation, be ahead of the curve, where $54,000 in net operating income, mind you, based off of 6 bedrooms, 6 beds, 2 baths, 1,700 square feet. Yes, it's listed by agent broker, but it's a deal. It's a deal, y'all, man. Y'all got to get this at a lower price, though, and the agent is not going to budge easily. Only how the agent's going to budge with you is if you can close that bad boy, which you can within 10 days. But the net operating income would be $4,500 a month based off of the 6 doors of $750. Or if you really want to put your hands together, $1,100 times 6, that's $7,000 a month. Times that by 12, that's $82,000. So that means that your net operating income literally pays for itself in the first year. Granted, Airbnb, Verbo, and charging as much as possible, as much as the highway can bear, as much as the highway will bear, pardon me, as much as the highway will bear. Get as much maximized profit as possible. So let me get my calculator and share my screen again. Okay. Hope you guys can see my calculator. Okay. You guys can see my calculator. Perfect. Let's go back to this property. So let's super analyze this. If you can expand it where it's an 8-bedroom, that makes it where the net operating income per month can range around 10,000. Under 10,000, but it can still make it your worthwhile. Plus, I got a good lender that lends nationwide. So only thing you need to do is just pay those loan fees, set aside for the loan points. That's 2%, 8% interest granted on the loan payment every single month that you pay. If you're going to do it where you're going to put up 20% down, I got a lender that will lend as low as $50,000 to you. And I got a private lender as well, where if you can be able to draft up the necessaries, you tell them that, yo, this property right here, 6-bedroom, 75,000. It's in Watertown, New York. I don't know where's Watertown, New York, but if the rents goes in this area for $1,500, $2,000, based off his estimates, based off of recorded rents that landlords usually talk on forums, you can be able to make your money back within 11 months if you was the person to do something like that. So let me be conservative. 750 times 6 doors. If we just left it alone, that's 4,500 a month. Times that by 12, it's 54,000 per year. And someone that gets their credit clean, get authorized to trade lines, they can literally buy this on credit. They can use the business credit, or they can use credit card stacking. They can use credit card stacking to get this property, hopefully lower your cash out the credit and give them 60, while you operate this property at 54,000 a year because of you charging $750 per 6 units. That's 4,500 times that's by 12. It's 54,000. What else you have to factor? And that's if you bought it in cash. That's say if you used the credit into cash, cashed it out with a full offer, they accept it. You don't do anything else to the property. But if you want to get more on your enterprising type of tip, got to see on that zoning, got to see how many doors can you put, because you got to tear it down in order to expand to 10, 12 units. I gotcha. But if the repairs cost around 60,000, and that's where you get your construction lender to go at it at 110, so you can have reserves. So 110 asks for the construction loan, but your real repairs cost 60. That gives you a profit of 50. You finance 50,000. Say if it was 20% down on a $250,000 property, then you got a construction loan on that. Say if the repairs is around 80. Say if your repairs around 80, but you ask the lender for, once again, that 110. That's what you do on every single loan. So you're pretty much using your lender's funds to buy more properties. That's really what you're doing. It's really what every real estate investor that's savvy, that isn't telling y'all. Grant Cardone isn't telling y'all this. My guy, Capital Cash, Mark, he's telling everybody all of this. Because you profit off of your entry. Your construction loan gets you more funds. If you get it where you don't spend 75, your whole 75 at it, you get it for 58, 60. You could take away some level of pride with you at home. So that's a multifamily, single family, condo, a foreclosed multifamily in Yonkers, New York. So I'm not a foreclosed specialist. I always tell everybody we try to get these bad boys at pre-foreclosure. Try to tell everybody get these bad boys pre-foreclosure. Okay, so this is just on 1 unit. So condo buyer. So that is something where you guys would use PropStream, use the filters to find properties that have condo cash buyers that's in the Yonkers, New York zip code area. Then you get this bad boy for 60 and you sell it to them for 70. That's only how you can profit on this deal. At least for me, when it comes to wholesale real estate and switching paperwork and doing all that other stuff, all that other type of good negotiating. Then we got this multifamily, once again, duplex. Got you a Dewey. So this is a 3-bedroom duplex apartment, over 1-bedroom apartment. So this is each unit having a separate entrance, common laundry in sight, large balcony that leads to a beautiful backyard. Okay. So seller financing. Try to get this for $400,000. Give them a scenario of some money up front, but have the owner carry for 3 to 4 years. If this is turnkey ready, then try to get those rents as high as possible. Airbnb it. And a lot of times people use the customer's rent to pay the owner up front. They have it set up of a structure of $3,500. They charge up in rents. They max out $3,500. The lease payments or the term payments be around $1,800, $2,100. You profit $1,400 per month in between a sandwich deal. So really sandwich deals. So really seller financing, sandwich deal, subject to all the same thing, all the same criteria. But try to get this at $400,000 because we don't do full price. Sorry. Can't do it at full price. And skip trace if you can. Skip trace if you can. So you can undercut this agent. Yes, that's what we do. We play bully ball over here. We don't pay for full price, and we don't like working with realtors. So that's just something that people should focus on. So the seller financing, that's always going to be an opportunity for people to take advantage on. That's always going to be something that's going to be there. Somebody's always going to have a problem with their loan. Somebody's either going to have a garbage loan where it was a loan that was interest only, a scenario of somebody refinancing and now they cashed out on their refinance and now they need help and they need more liquidity. Because really the subject too, you're helping owners avoid foreclosures, you're helping people losing a house. So there is a form of moral good when it comes to doing this. You can be able to make money off the sandwich deal, $1,400, $2,000 a month, times that by 12, that's 20 G's to you. Times that by 3-4 years, that's 60, 80,000. Plus you have the option to buy. You can use that 60,000 that you use in cash flow to be down payment to buy the property outright. Well, not outright, but get a loan on the property, close it, take it over, do what you need to do, and just start renting it full price without paying a spread in between. You can start having it where you can keep $4,000 per month and you don't have to give it to a seller that you got to rely on to be the bank. So the seller is the bank, mind you. That's the whole format of this. The seller is the bank. But Airbnb is killing it, where now they're starting to have more laws when it comes to Airbnb. They are noticing that Airbnb is starting to take over a lot of industries. They're making it where, they're blaming it. Well, real estate prices is high because of Airbnb. That's not necessarily true. It's because of Zillow. Zillow will literally list a property 30% above asking price, and that's why anybody that thinks they're buying an investment property on Zillow is smart. Nah, that's why you use PropStream. That's why you use Property Shark. That's why you use Prospect Now. You get off-market deals, and you just following up, factoring in time, following up, doing due diligence on certain people, cash offer, quick close. We handle all closing costs, all that good stuff, all that good jazz that gets them reeled in. The title company, you have that organized and you set up a blind HUD-1 statement so you can save money on double closing. That's a blind HUD-1 statement. If your title company doesn't know how to do that, then go to another title company because they don't know how to use certain savvy strategies to save you money when it comes to that double closing, because double closing fees is expensive, yo. I'm gonna keep that 100%. Double closing fees is expensive when you're doing wholesale real estate. That's super expensive, like just out of belief of how people don't understand that you can be able to get access to properties to little to nothing. And there is a content creator, Angela, if you're listening, she mentioned about Habitat, homes for Habitat. So pretty much you do community service to get access to property free and clear. Rent that bad boy out. And that's also another play that people can pay attention to. So, I'm always getting across good information. I'm always seeking out good information. I pay when it comes to a lot of mentors, real estate agents, real estate attorneys. If you focus on that, finding people that is willing to work with you, willing to talk with you, giving you certain type of aspects of lending, underwriting, zoning, the construction, the bases, builders in the area, you skip tracing builders, you get in contact with them, you provide a deal for them. You become an indispensable asset to their operations and to their life. You can be able to charge a fee every single deal. You could be able to have it where you position yourself every single time of a market of opening up liquidity. Say interest rates rises up. Okay. It's only temporary. Interest rates will go back down. If interest rates go back down again, it opens up liquidity again. And that means more building, more new construction, more people that's going to be cultivating, and more of people that had their homes that were $300,000 in 2014 that winds up being $800,000 in 2022. The more that they will win, the more that their property will be 1.2. At least that's like that here in California. So when I'm talking like this, I know that everybody's like, what market is you basing off of this? LA, New York, Miami, Coral Gables, hell, even Philly has gotten expensive. From the people that came up on the panel, we analyzed the Philly markets up and down. But, not everything is doom and gloom. There's always going to be a basis of you finding a deal just off of you having a sign saying we buy houses, or we buy ugly houses, or we buy ugly, demented looking, just disgusting ass properties. That's how you can pick up a property, scoop it up for a cheap discount, do it the old school 1990s way, and you can be able to find out how you pick up these discounted properties. Got your lender connected, you got your cash set asides, or you got your business credit to fund a down payment, or just buy a property outright. Just buy the property outright and start getting that free positive cash flow where you don't have to service the debt. You don't have to pay loan points, interest, yada, yada. Only thing you have to pay is that business credit card, but you can be more flexible with business credit. So you can literally have it where your utilization on business credit is 70%, but it's shielding off your personal. So people will build up the FICO score, get PG on the business credit. Don't crash the credit. You always make sure that you're making payments on that. So if you get $70,000 on a business credit card to go make a quick fix and flip play, mind you, always have a debt service schedule type of plan. Always know how much you're going to charge on rent. Always know how much is the areas going for when it comes to the comps. If you're going to do a fix and flip, understand the time lag. How long does it take for the property to sell on the MLS? So the more that you focus on that, the more you have upside. And the more upside that you have, the more when you do a cash out refinance, the more that you can win and open up that liquidity, focus on more plays, turn that 60,000 to 300,000, turn that 250 into $1 million, and stair step it that way. Everybody is doing this when it comes to time cycle. It usually takes people to do 2 years on a BRRRR investment. So that's buy, rehab, refinance, repeat, refinance again. There's people that take 2 loans out on their property. I don't recommend it, where they get a hard money loan and they get a conventional big bank type of loan. I don't necessarily recommend that, but that's how they get 2 loan checks. And they go get some development plays and they build an apartment. And that's how the apartment building can service that debt. If you build an apartment building up with $500,000 in total, meaning that the land is enough and zoned for multifamilies, you build an 8-unit, charge as much market rent as possible, be a very wealthy man. Because it takes $500,000 up front, but the net operating income can be around $160,000 to $180,000 per year if it's 8 to 10 unit, mind you. So the building per square foot has to be calculated. Construction costs. So people are building a lot of properties in Alabama because the construction cost is low. Alabama, Florida Panhandle, outside of Atlanta Metro, Monroe, Dalton, Georgia, Cartersville. Decatur's getting up there in price as well, but these are the strategies, man. These is the strategies that people need to take involved in. So that's stock market and real estate. Look at the seller financing. Use tools like PropStream, Property Shark, and Prospect Now. So those are the tools where you can get access to any loan information of the property. You can get access to the phone number of the owner, pick that phone up, provide that cash offer. If they're interested, get their email. You send them via email, the purchase and sales agreement via email. If you're not going to hold on to it, assign it to a cash buyer. That's where you skip trace cash sales in a zip code. So that's all the investors or all the people that have cash liquidity. You got to get in those bank accounts as well. If they win it in life, skip trace them, offer a deal. That's where you have deal presentation, where you have files of the photos, videos, have it where it's ready to be vacant. So it's ready at vacant. So at closing, it'll be ready vacant. You can give them good estimates when it comes to construction costs. And you always do the dollar per dollar method. So you do $50 per square foot times the total square footage, and that gives you the construction cost. So if your construction repairs is $50, say if you estimate at $50 and the square footage of the property is 2,200 square foot, that means the construction cost is going to cost $110,000. And say if they only have to spend 70 of the 110, that gives them 40,000. And what you do is you give them a lender, you give them a property contract for a higher $20,000 fee on top. You get them the lender get them access where the 40,000, get them into a $200,000 property. You help them get more deals. You profit off of getting more assignment of contracts. So you're just helping them, guiding them on the lender. I got the lender. I got the construction costs. I got the contract, the deal. What's up? It's in the area where there's a lot of activity. And say if there's new construction, new builds, hot area, vacant land lots, assigning those contracts to builders. That's where wholesale real estate, when it comes to vacant land lots, work as well. I need to get in contact with certain people in Houston. But I'm Real Deal Financial. I appreciate everybody that tuned in. I appreciate everybody that clicked the like. I appreciate everybody that shared the video. If anybody needs to get in contact with me when it comes to credit repair, credit funding, or just a simple business consultation where I can help you get lenders, help you talk to people when it comes to cash buyers, or say if you just need help when it comes to someone that can at least walk with you step by step. Creditbuilder475@gmail.com. That's creditbuilder475@gmail.com. I appreciate you. Everybody have a blessed day. Thank you.